It's a VC panel, but let's quickly start with an intro. Should be
Hi everyone, good evening. It'll be really nice if we could have some more crowd here. We'll try to keep it really short and crisp. The food is definitely good here. I'm also starving since morning, so I'll also not take much time here. Okay, my name is Shruti. I've been in the Web3 space for over 3 years now. Ex EY, where I was looking into the taxation and etc. And today I'm leading the BD efforts at Vitru. It's a global exchange with 45% of our users from Europe, and it's a great place to work.
Hi, everyone. I'm Jonathan. I do a mix of strategy and ops in Omnichain. So that'll include anything non-technical, whether that's BD, partnerships, legal, payments, ops, a variety of things. Prior to that, I worked at GIC, the Singapore Sovereign Wealth Fund. So I did late stage venture and growth equity there, covering crypto and fintech. And then prior to that, I did investment banking at JP Morgan and equity research at Credit Suisse. So excited to talk here.
alright, Puppy. I'm Sapil. I am currently working as CGO at Levy Labs. It's a venture capital fund focusing BDA builders. As of now, we are 5 portfolios strong. Out of which I think approximately 40 or 42 are from India itself. Rest are the major ones who are standing right now and thoughts a very lot of values like humanity, population, and peer amounts as well. Quickly jumping into the panel. The first question to both of you: how your founders assess whether they venture funding or some alternative way of funding like grants or 2V sales, and which one is more on the brilliant point?
I'd say from the founder's perspective, obviously grants make more sense if you're limited on capital. However, at least from the investment side, I would like to see someone, that has a degree of network already. So they've already tried to do VC fundraising. It's preferable to have at least some external VCs outside of the region that you're in already. And then at least the VC feedback is helpful to get an idea, like feedback on your idea. So a lot of times we get like a random project, let's say they're building a DEX, and they don't know that there's 10 other DEXs that are exactly like themselves. Going to the VC who has heard feedback from 10 other pitches is helpful to at least get feedback on like, am I building the right thing? And crypto tends to move in markets, right? So, right now AI agents are hot. Now we have 20 different people building that same thing. In the past, there was a lot of L1s, and then we had a lot of people focusing on cross-chain bridges. Unfortunately, there's a bit of like timing to the game, and then also figuring out how you differentiate, and then also the degree of networks that you have that can get you to the right exchange, to the right VC partner, to the right market maker, all of those all in a compressed timeline for you to basically blitz scale. So I think that's the simple answer is like, obviously grants if you can, but I think grants don't necessarily, like the companies that come to us for grants, usually are not the successful ones. The ones that already have a VC round and skip grants altogether, those are the ones that have the big outcomes. So, yeah.
And definitely agree to what you said. Just before I answer this question, are there any founders in this room or anyone who's building up a project and looking for the VC strategy or any more avenues to raise funds? We don't have that kind of crowd. Okay, we have one. So for the benefit of this gentleman, I'll answer this question. So to my mind, I think because, of course, I'm working with Petro and I come across like several projects in a day. At the same time, also assisting another project called NodeOps, where I'm looking at a lot of their things on the legal and the finance side. So given this combined experience, so it depends, right? See, what will happen if you get a VC? Like, you get like a good, a backing to your project, which is more, in the terms of a long run. But at the same time, where, your project is more towards a community engagement side, or you're looking for more early, users getting adopted, in that scenario, I'll always suggest that it's a good idea to go for other options, which could be like an ICO or again, grants. It depends from where are you getting the grants. Are you like looking at from the foundation side, or, that is another factor that you need to consider. Just remember one thing, if you're getting like too many VCs, you're also getting your equity diluted at the same time. So these are some factors which I personally evaluate when we are looking at it, like which roadmap and which milestone we are at, what's our ultimate objective, and basis that you take a decision.
I mean, in my opinion, I guess So I kind of reject this alternative funding methods because uh, grants, venture funding, and local node sales, I think they are a part of pipeline. Because project is somehow their IK of your first support, then some cat IK top shows is the is the grants that effectively use almost a very acceptable perspective. And then when it comes to the GEM strategies, probably local sales, make look a buy of that, it's a collective party. And tomorrow you just don't want to raise up probably a much bigger amount in probably uh, uh, token sales and the node sales, the maximum sales. I think also required. Jamie is the next question. So, second question to be coming back to you. How important is the size engagement of a project's community when VCs are making investment? See,
So again, bringing it back to the same fact that, we are working for a Web3 and not a traditional. That's like the starting point for every answer. I learned it. So yeah, I'm going to use that a lot of times. Okay, anyways, on a more serious side, so it's really essential because eventually, what we are bringing is also important that you should have the right set of audience for that, the right set of end users for that. And again, it's a whole game about how you're engaging, right? I mean, we have seen projects which have hyped a lot, but subsequently, after that boom that they brought in the initial few weeks, if there was engagement, the projects have, gone for a toss. And that, again, also becomes one of the criterias when any VC or a centralized exchange is picking up a project. Also, additionally, there could be cases where, similar founding team or similar members are trying to build a secondary project. That also impacts at that stage as well. So to my mind, when we look at, we have criterias and we have buckets that we allocate. And one of the major bucket that we look at is definitely the engagements that are involved. What kind of, things like, is it having like more of a staking, protocol involved with it? Are they like, so, we evaluate everything. We look at the tokenomics, we look at a lot of other factors. So yes, it is extremely essential.
I think we can look at an L1 as an example and how to evaluate that and how that's changed over time. So if you look at Monad, Chain, Movement, a lot of these guys pre-launch, a lot of people focused on number of projects. Or you look at testnet statistics, which you look at number of wallet addresses, number of transactions that already occurred. But we do know nowadays that with airdrop farmers, they all kind of gamify the statistics and there's a lot of bots on chain. So over time, people looked at the testnet stats and they're like, okay, I don't believe this anymore. Then they looked at, like with Say's launch, a lot of people were looking at the number of projects, but then Say launched and then a lot of the projects were not usable, right? So then that doesn't become the right metric. The right metric after launch becomes TVL, or for a layer one, either TVL or user engagement, which ties back to the social statistics. So obviously the rate of the Twitter acceleration, if you look at something like a lot of AI dashboards like Cato will actually show the amount of impressions for a certain project. So you can see how much of the mind share of crypto Twitter do they actually have. You can look at the amount of impressions on the actual tweets, because sometimes projects have a high amount of Twitter followers, which they get through Galaxy, through questing. But then once they start posting after Galaxy falls off, the amount of engagements they get per Twitter post falls off dramatically. So it's a mix of social stats, so user attention, as well as actual real metrics like GFI and projects built, in addition to almost this degen memes vibe. So what you saw Monad did successfully in the past is they created a gated Discord where people can come in and then people can produce random art pieces, which they can then put on the internet, and people were really excited about. That intangible value actually created a lot of user attention, and it sounded stupid at the beginning, but then everyone was just like, wow, I think Monad's very valuable because of the amount of meme traction it can sort of get. So I think you have to do a mix of all of them, but it all ties back to impressions, like we've mentioned.
would you, consider this in the project where, let's say, a community is X and impact is 10x? What one would you say best?
Take your Twitter is,
Yeah, let's say, the Britain has value of X. The community value is X. But in that pale, the market is in X. How would you assess? Do we have any use to quantify? Yes.
I mean, in that scenario, that would be exciting, right? Because like the market has not yet recognized the value. So I mean, if you look at something that's got a low amount of Twitter following but a high amount of TVL, that means its market cap's probably much lower than the value it actually brings to the market, right? So usually things have about like a 1-to-1 market cap to TVL sort of ratio for FTV. If they have, 10 million in FTV and then they have much lower follower count, yeah, I think it makes sense. But is that what you were getting at, or? Okay.
Very well.
No, I agree. I mean, if I were to understand your question correctly, you meant that, you could have some X number of followers on Twitter. And
You were trying to put a particular question, but it was valid in marriage.
so it has to be value driven because you just can't just show numbers and have like 0 engagements or 0 impressions, right?
So the second question scats it because
Why? What was the second question?
does the size of a community
See, you could have size. You can just, get the bots and have as much size as you want. And I honestly saying that, when we look at projects, we see that some of them have like so many number of followers. But when you go and pick up their tweets or the engagements there, it's barely like 2 or 3. Sometimes a lot of, other handles are also tagged in that and we never see a retweet at all. So obviously those are some of the red flags that we do observe. See, that would be one of the factors, but that would not be the sole factors. But there is a trend or a pattern that any, strong VC or a centralized exchange would be looking at to ensure that whatever the numbers that we're just seeing on the X handle or a Telegram group, how much is the real engagement in that? So that has to be, it has to go hand in hand. Even from a VC perspective, actually, to be very honest, yeah, it has to. Especially, see, VCs, again, you need to also look at which stage the VC is entering into. Probably you'll always see very close ones or, people who know each other, they come in the pre-seed round, as we all know. But as and when you're launching your, very close to like a KOL round probably, or maybe the final round that you're raising, again, these numbers and these engagements will become extremely, extremely essential.
got it. Third was beyond technical innovation. What role do business models and market strategies play attracting VC interest? Attracting VCs.
Absolutely. That's why I say that you might have a very strong tech team. Unless until you don't have a BD team, you can't do anything.
We do SG. Power PRC.
So there is no way that you assess a GTM, but then that's why you have the experts getting onboarded, right? Now look at any team which might be extremely tech strong. For example, even where I'm working right now, I see that the founders and all are really, really hard bent on building. But when they have less hands on the BD side, on the marketing side, they need to spread out their wings that side as well. So, of course, what you're bringing from the technical side would make a difference. But unless and until you don't have a proper roadmap about go-to-market strategy, which doesn't just mean that you launch something and, you just create a hype and it's done. It involves a lot of steps for that sustainability to be there. Like I mentioned, we have seen projects which were like extreme. I'll not take any names because I don't want to offend any of the projects. And we know those names. I'm sure like when I say that, people know the names. Last year, IBW, we did see some projects making massive noise. At Singapore Token 2049, there was this very interesting project that went rounds. So I'm just saying, so we know that the hype is created, but for the sustainability, you need to have a GTM in place, a proper roadmap in place, a proper phased approach in place. And that's when, it's important to have the right folks to bring in that kind of an effect.
Doctors, your parts. Are there different ways to accept the market strategies? Do you also rather focus on set with different TTIP sectors that understand the which follows, or is the way accepted and like a set by step and a guy?
Well, there's go-to-market, but maybe I'll take a different angle on this question. I thought it was like product model. So like, what do the unit economics or what does the business setup look like for it to actually become profitable? Like if you take a look at Web 2 frameworks, eventually you want it to tie back to, you have some sort of profitability, whether that's net income or EBITDA, that will drive yourself on a multiple, which will then cause the value. And now in crypto, there's oftentimes where fundamentals decouple from actual valuation. So, the amount of impressions and actual user engagement may trump some things valuation. So you might see a token that's just completely for governance, and like that has value, even though there's no revenues actually coming back to it. But when we think of something like what I would be more interested in, you compare a DEX versus perps, for example. A DEX, you may maybe only earn 30 bips and that goes to the LPs. So as the protocol itself, unless you're Uniswap and get the retail front end of 50 bips, you're not actually making any money. If you're doing perps and you're able to charge a sufficient like 5 to 10 bips of actual trading fees and you get high volumes, the amount of money you generate over a year could actually pay for your cash burn. So there are certain models that are actually like out there right now that are receiving a ton of revenue and fees, but aren't on people's like tracking avenue. Like if you look at Banana Gun on Solana, that's a trading bot that basically people can trade it. What I call this category is like simplified UX for DEXs. Like I can trade things using Telegram with a bot that'll go execute it on Solana through Radio. There it charges a 1% swap fee. This protocol Banana Gun is basically generating as much money as Aave is itself. So one of the highest generating things on DeFi Llama, but people aren't even looking at it. And there's multiple of these things. Another thing is like Moonshot, for example. I don't know if you guys have heard of that, but that's a new thing. And a lot of crypto native people don't know how to use it, but it's simplified UX to buy something. So really great business model in terms of making something simple for people. Once people are captive on the program, on the platform, you can actually get revenues that come back to you. And then as a VC, I get money back immediately, right? Like so Moonshot generates right now $200,000 per day after having launched, I don't know, maybe this year, for example. They don't need VC funding anymore. So you don't have to worry about any sort of dilution in the future. You don't have to worry about the company burning so much money that your money goes nowhere. So I definitely think the design of the product and the setup for the business is really important.
In 2004, we have seen a few projects have done quite amount of no-sits. John and Shruti, this question is somebody of the document, but do you see that no-sits is a way to go?
I should not be commenting on this when I'm working for Noda. No, so it's been like a new avenue, a new thing that has been discovered and has gained a lot of popularity because there's a lot of gamification involved. I don't know how many of you are familiar that there are certain platforms also which are collaborating with like so many ecosystems so that they can come in as a marketplace and be like a one-stop solution. At least in my experience and as per the statistics that I'm aware of, it's been one of the popular choices, going really well with the trend. So yeah, it's going well so far.
How critical is a project's tokenomics? VC's investment history.
I would say we've seen a lot of exchanges that come to us and say they would prefer a small amount of circulating supply online. And then you might see like VCs that want shorter resting period because they want to exit. So there's different factors that kind of play in there. Like if you want to maximize the potential for your fundraise, you might lower the vesting period in your tokenomics, but you might screw over the project in the long term. So it's kind of a tricky answer. I think within the tokenomics, all the different stakeholders will basically be fighting you for better terms, right? So KOLs come in, they want a discounted valuation, a shorter vesting period. VCs here with the KOL terms, they want to mimic the KOL terms, but that would screw over the community sale. Community sale comes in, they want a lower valuation, lower than the VC round, but then that screws over the VCs. So you kind of got to be a bit strategic in terms of the allocations. Usually with the tokenomics, you have it, over time get higher valuations for other people, but then you have to think about, your leverage as well going into each of the discussions. So if you want to guarantee a Binance Launchpad listing, you might have to screw over every other stakeholder and benefit Binance. But so it really depends where you have the strength of your relationships, I think.
Actually, very much covered in that. So again, tokenomics is another key factor which any of your stakeholders will be looking at it very clearly from their own side of things. So, for example, when it comes to even an exchange, from an exchange perspective, we look at tokenomics very, very carefully. There's a complete due diligence that goes through that because we want to be very sure that, the people who are your main token holders, what's going to be the situation the moment they go live on the exchange. In fact, a lot of smaller projects, sometimes you've seen that 86% is held by a very small group of people. And those projects are outrightly rejected by the exchange. So again, when you're drafting your tokenomics, you have to remember that every stakeholder that is coming in, like he mentioned, like if it's your KOLs looking at the tokenomics, they'll have their own side of things that they would want should be there. A VC would look at it from a perspective of, what is in store for them. At the same time, we do see a good proportion that is being, allocated towards community engagements. So again, tokenomics is one of the key factors. I mean, you're covering all the key factors, so I really can't help out in that. But it plays a massive role, and it's very essential that when you're drafting it, it should be going through the eyes of the various stakeholders that are involved in your project. Because that is essentially that is going to be leading your comfort zone. I'll use the word comfort zone in a very layman language here, but that is, again, very essential when you're trying to get in the right partners for your project.
I'd probably say tokenomics is kind of just a check the box sort of thing, right? Like when you go into a job interview, you have to know the minimum amount of technical knowledge. For tokenomics, it's just got to be like, at least make sense, but that's not going to make or break your pitch. It's just something they want to see.
Sure. Ask me. Out of curiosity, is there any generic way to say that this tokenomics is a good tectonics? Or you ask this, what tokenomics is a good tokenomics? Or which tokenomics is it over?
Yeah, so there's the tokenomics spreadsheet that people index on. But I think when people think of good tokenomics, they start to think about, okay, if I stake my token, do I get a percentage of the revenues from the protocol? If I stake my token, do I get future access to launch pads or launches within this platform, right? It depends on the, depends on the utility that you get from the tokenomics itself. I think if we look at Hyperliquid, for example, what they did was they didn't have any VC holdings. They airdropped 31% of their supply to everyone. And then they also decided to reward the people that were going to be their power users on the platform. So people that had participated in the points program, did a lot of perps trading, they got rewarded. And then when they got the token, that token is sort of like exchanges where you hold the token, you get a discount on trading fees moving forward. So if you sell, you don't get as much discounts in the future. And then people can buy the token to speculate or not, but like appealing to the users that are going to be the core group of your actual user base, I think is fairly important there. And there's a couple takeaways from tokenomics, but that's one of them.
Question again on the document. In the copy, investment cycle as well as in a project go live, right? How much scale involvement means it's? Or are you copy dejected KOL or?
Somehow I feel probably KOL was not a very, very key important factor. A couple of...
I know there's no KOL. Yeah.
There are. How many can we just have hand raises so that we can filter our answer then? And now it's like one of the ask for every project that reaches out that if we have you as one of the partners, what is the input we can get from you from the KOL side? In fact, even sharing some insights, when projects come to BitTrue for a proposal, they upfront now ask us how many KOLs and what are the regions and what kind of amplification we can get from your KOLs. The stories have completely reversed at the moment.
The way I look at KOLs is it's kind of like blitz marketing, right? So how KOL rounds are structured nowadays is you get a 50% discount in your token, and then there's a lockup period of maybe like 3 to 12 months that they get locked up for. And then people will buy it, and they maybe have a content requirement to produce like 1 or 2 tweets about your actual product. So basically this is why you see crypto Twitter, there's just series of tweets where everyone's tweeting about one product because they probably just did a KOL round where everyone's tweeting about it. And then that's an opportunity for you to get eyeballs on your product. So I think in terms of your roadmap of what you want to do, I would say have something actually released so people can come to your platform and try it. If you have a points program, for example, and then you do KOL after, users will come to your website, engage in it, and then maybe you have some sort of tool to keep them continually engaged in the longer term. The downside of KOL rounds, of course, is where you see a token price and it just goes up and then it falls right back down because the KOLs pump it all up together to make money. And then as they all dump, they're basically dumping onto retail. And that can actually hurt you and destroy your tokenomics because you're giving out supply at a discounted valuation, then everyone else is getting basically dumped on. So for the longer term, you kind of have to think of ways to get the KOLs engaged on longer term sort of periods. So I haven't seen a good way to do this. Sometimes people do like a 1 year sort of lockup and then they do another program right after. So then if they dump, they're getting new tokens to replace it. But I sort of think of like, incentives that you do. So Osmosis used to do a high amount of incentives as a DEX. They paid out a really high amount. You need enough user engagement to come in to exceed the amount of like tokens that you're giving away, right? And this is a similar issue with like Polygon and grants, right? Where Polygon's giving out more money than they are actually receiving in attention. That's increasing the token price. It's going to lead to the token going down only. So you just have to think about budgeting properly.
Cool. So scaling is good.
It's good if you use it properly. Otherwise, they could screw you over.
Not really. I wouldn't say that. It also depends on what you're trying to achieve through that KOLs. It also depends on what you're trying to achieve at the end of the day through the KOLs. I mean, I could just employ a lot of KOLs and really have nothing to do from the gamification or the community engagement side, right? So it depends.
No, I think, what John said, right? Longer that, if we have a strategic KOS, right, that can push the narrative at the right time,
Yes.
is the game to do.
Exactly.
So I think the same is. Last question. How we see that exchanges can collaborate and ensure the projects entering the market are both secure and they are convertible strong.
See, from a exchange perspective, I think I can, answer that better. So, when we are having a project getting live on an exchange, and that could be any exchange, so we are actually kind of giving an asset on board to our users who have a trust on the exchange. So they feel that, if there's a support of a X exchange on it, like a tier 1, tier 2, whatever, so they definitely believe in that project. They've already evaluated it from all angles, and that is why the asset today is live on an exchange. I'm not talking about, any and every exchange, but I'm talking about the ones which have a very long standing in the market at the moment. So that is one thing that, there's a kind of a trust which your users would have that, hey, if this project is getting live, then of course we look at the kind of amplification and the marketing effect that exchange can bring in, because they already have a community base created, right? They're already verified users. And every exchange has their own database about how much are their active users, and all those demographics are available. That is number 2. Number 3 is the kind of educational content that is created through these established avenues. People are able to learn better, right? So they are able to understand what exactly. See, again, when it comes to end users, it's not essentially that everybody has that aptitude to understand. They have that, acumen to understand what is actually coming in. But when, doing like an AMA on a platform which is having like diversified users on it, so there is a lot that as an exchange partner, they're able to bring into that project. So, I mean, if I have to cut short in really small and simple bullets, it would be more about there is a trust factor that is coming in because it's backed by those names. There's a better amplification and a better way of marketing that. And then, of course, through educational contents or community engagement campaigns as well. So, you're able to get those early adopters or users to your project.
This is a bit of a tricky question because I think if the exchange doesn't venture invest in a project, they want the project's valuation to be as low as possible and they want to see the token price go up, at least from launch. I don't know if they care as much about like for example, let's say Binance launch pool you're on. As long as the Binance launch pool or launchpad people get money, they sell out, and then the token price falls down after, I don't think they care that much. Whereas VCs might have a longer holding period. So maybe they have like a 2 to 4 year vest. So they don't just care about the token price doing well at the first jump. They think about how well it's going to do over the longer term period. So it would be nice to actually see the exchange venture arm also co-invest alongside the VC partner, because then they would have both a longer term horizon. But going back to, I think, a bit to your original question is just like, how do you ensure that there's quality projects? And I think maybe it's sharing diligence materials. So I think often VCs do this as well as, everyone basically has to do technical diligence, diligence on the founders, reference checks, diligence on the industry for research. Everyone's going through the same check of things, and everyone takes maybe a couple hours doing that. If people were able to share their materials on diligence, people can then do additional research on top of other people's research. So, but I think the more you share your research, basically you're giving your alpha to other people, and then people don't need to like invest in your fund or like participate in the venture fund for an exchange. So it might be a bit too optimistic to ask people to do that, but I don't know.
I think that is about the last one to act. Is the security audits that is also important subject. So our response at Texties also that the security audits that is also important to submit to your exchange as well as in the due diligence. Thank you so much for joining us here. Should be Jonathan Esbon at Copy Audits.